What's up, everybody? Okay. Cat, please get down. Hey, everybody. Welcome to the show. Move a cat. There you go. Today, we're going to be taking a look at JPMorgan getting all in on blockchain. They're creating their own fund similar to the BitBoy fund by BlackRock. I think there's a lot of things to be bullish about there. So, let me pull open the other screen here. Okay. All right. All right, let's check this out here. Let's hit refresh on CoinGecko. Okay, market cap coming in at just over $3 trillion. We did have a big, fairly big drop today down to 86,000. 24-hour volume, 113 billion. Coin dominance, 56.8%. ETH dominance, 11.9%. Here's a visualization of the market cap, and you see, wow, just tanked. With good volume, though. You watch how this kind of works inverse a little bit. Trading volume at 113 billion. Visualization on that. Our top trending, we have looked at all these before, of course. One is Bitcoin top trending. The top gainers of the day, de-agent AI, Adiera, and AI Rig Complex. Let's check out what these three are real quick. De-agent AI. Come on. Take my phone off the Wi-Fi here. Why are these not opening up? Okay. I do not know why these are not pulling up. But we'll just move on without it, I guess. Okay. Bitcoin price coming in at 86,899. Actually have a long, okay. It's been a little in the green. Been a little worse. BNB 856. XRP $1.92. Solana at 126. Tron at 28 cents. Dogecoin at 13 cents. And Cardano at 38.71. 38, almost 39 cents. Which you can see is now dropped below the figure HELOC. Which is like a loan coin. It's never at $1. It's always like right around $1. Bybit coming in at 58.38. Just look at the last hour here. Bet Fund, Ethereum Classic, ICP, Ondo, all down 1%. Bitcoin Cash Chainlink also down 1%. Biggest gainer, the Midnight coin on the Cardano ecosystem. Sky at 2.2%. Mantle at 1.5%. Zcash 1.4%. Biggest gainers over the last 24 hours. Zcash, Prudence Blockchain, Tron, Rain, HTX DAO. Range showing those good numbers again for the monthly. I guess it'll be like that all month, and then it'll go to red. That's how it works. Meme Core up 40.8%. Mantle up 11.5%. Monero 10.4%. Sky 7.4%. Zcash 3.4%. Biggest losers of the week: Athena, Caspa, Bum.Fun, HBAR, Pepe, all 15% or more. Range still showing the big gains. At number 49, out of nowhere, 133.9%. Sky 11.2%, Bybit 9.7%, Bitcoin Cash 6.6%. Yeah, 5% or more gainers for the month. Losers for the month: Aptos, ICP, Zcash, all between, and Near Protocol, all between 38.4%, 46.7%. CanCoin coming at 36.4%. Polkadot 34.3%. Uniswap and Algorand all above 30% losses for the month. Ouch. Okay. Let's try this one more time. See if we can get one of these to pull up. There we go. Okay. So we'll take a look at these coins. They're all trending. Top gainers. Okay. Okay. Audiera. Ticker is Beat. Probably some kind of music NFT or something. I already guess. It's on Binance chain. Hey. Oh, wow. Yeah. That's basically, is this a K-pop coin? The Legend Reborn. Here. Oh, we looked at this one already, didn't we? 20 years legacy of 500 memories of 560 million dancers now reborn on chain. Yeah, we looked at this one already. All these K-pop dances. So funny. Yeah, we looked at this one already. I think we did. I saw it somewhere anyways. Okay. De-agent AI coming at 30 cents. Whoa. A really big spike. It's on the Sui blockchain and BNB, but also on Sui. Check it out. Building trustworthy AI autonomy. We envision a future where AI agents and humans co-govern decentralized systems, making decisions that are transparent, consistent, and anchored in history. Largest agent infrastructure on Sui, BSC, Bitcoin. What decentralized AI feels today? Multiple personality dilemma. Yeah. Identity split decision makers. Says AI agents may give contradictory answers to the same question, disrupting consistency. Ensuring decision traceability and output consistency is key to maintaining agent reliability. Continuity. Agent without memory. Let's embrace the AI agent era. So it's kind of cool. Okay. AI rig complex. Been out for about a year. And it's on Solana. Pum.Fun. Arc.Fun. Intercomplex. Ticker is ARC. Take the red pill, then the blue pill. Works on all these projects, I guess. Discover the core components of our ecosystem and how they work together to power innovative AI applications. DeFi Llama there. OpenAI, Anthropic, DeepSeek. The foundational Rust-based system for building and orchestrating powerful lightweight AI agents. So this is this coin. That's to look at AI complex, rig complex. AI rig complex, ARC, I get it. Okay. Guess I caught a falling knife earlier. My trade's gone. It happens. I mean, just looking at this on the 1 hour chart. When were we this low? We took all that liquidity there. This is the last time we were this low. The low is 83,779. So this could have a lot more to fall, potentially. All right, let's look at the crypto fear and greed index. Now it's a 16, extreme fear. What happened that to fall? Does anybody know? Extreme fear last month, extreme fear yesterday, today. Now, last week. That's interesting because I didn't think we would be that low on fear. Okay, here is your chances of a rate cut. It's 24.4%. I think that's up, actually. I think. I thought we were closer to, I don't know. I'm not sure what it was yesterday. Let's look. Yeah, it was at 23.5%, 16.7% a month ago, 23.5% a week ago. Yesterday, it was exactly where it is now, 24.4. So 75% chance we're not getting a rate cut. We'd like to see these numbers get closer as we get there, and might indicate maybe we are going to get one. Get some good, better than expected numbers or something like that, a job report. Okay. With JPMorgan steps further into crypto with tokenized money fund. The new private fund, will run on the Ethereum blockchain and be available to qualified investors. JPMorgan is joining the list of traditional financial firms seeking to bring blockchain technology to an investing staple, the money market fund. For the banking giant's $4 trillion asset management arm, that's twice as big as crypto right now, is rolling out its first tokenized money market fund on the Ethereum blockchain. Is that right? What's the market cap? Yeah, 3 trillion. So, okay. So they got $1 trillion more in this one area of their bank. It's a $4 trillion bank. I know that. Yeah, $4 trillion asset management arm is rolling out its first tokenized money market fund on the Ethereum blockchain. JPMorgan will seed the fund with $100 million of its own capital and then open it to outside investors on Tuesday. Called My On-Chain Net Yield Fund, or Money, the private fund is supported by JPMorgan's tokenization platform, Connexus Digital Assets, and will be open to qualified investors or individuals with at least $5 million in investments in institutions with a maximum of $25 million. The The fund has a $1 million investment minimum. Wall Street has waded deeper into tokenization since the passage of the Genius Act earlier this year. The landmark measure, which establishes a regulatory framework for tokenized dollars known as stablecoins, has unleashed a wave of efforts to tokenize everything from stocks to bonds to funds and real assets. There's a massive amount of interest from clients around tokenization, said John Donahue, the head of Global Liquidity. We expect to be a leader in this space and work with clients to make sure we have a product lineup that allows them to have choices that we have in traditional money market funds on blockchain. And you can see this Ethereum. What is that? Bitwise? Yeah, Bitwise. JPMorgan launches tokenized money market fund on Ethereum as well as Wall Street moves on chain, joining BlackRock, Franklin Templeton, and Fidelity. JPMorgan, a global bank with $4 trillion in assets under management, is rolling out a tokenized money market fund. We already read this part, or it's the exact same thing we just read. The move marks JPMorgan's first tokenized money market fund, making it the largest GSIB or global systematically important banks to launch such a vehicle on the public blockchain, according to a press release shared with CoinDesk. The fund money is seeded. We already talked about that. See if there's anything new in here. The global bank joins a wave of high-profile giants launching tokenized funds on blockchain, with money market funds leading the charge. Franklin Templeton was among the first traditional financial arms with its Bydfi fund in 2021. Then BlackRock started its Bydfi fund in 2024, with tokenization specialist Securitize attracting $2 billion in assets to date. These vehicles allow investors to park idle cash on blockchain to earn a yield, like with a money market fund, but with faster settlement times. Around-the-clock trading and real-time visibility into ownership, increasingly, they are also used as a reserve management for decentralized finance protocols, or DeFi protocols, as a collateral and asset trading and asset management. The asset class has grown to $9 billion from $3 billion in a year, RWA data shows. The broader tokenized asset market is projected to grow 18.9 to grow to 18.9 trillion by 2033, BCG and Ripple said in a report. There is a massive amount of interest from clients around tokenization. John Donahue, head of global liquidity at JPMorgan Asset Management, WSJ. JPMorgan built money on Connex's digital assets. Connex is digital assets, bank's in-house tokenization platform. The product will likely serve as a test case for expanding the bank's lineup of on-chain offerings. Tokenization can fundamentally change the speed and efficiency of transactions, adding new capabilities to traditional products. Donahue said in a stat we believe, in a stat we, I don't know what that is. Believe, I think it's missing something there. The financial products will increasingly transact this way, and we're excited about the opportunities this creates for our clients and for the whole industry. Like traditional money market funds, Bodhi is set all short-term debt instruments and pay interest daily. Investors can redeem shares using either cash or Circle's USDC stablecoin. The fund will be accessible to qualified investors with a $1 million minimum investment. There you go. JPMorgan going all in on crypto. Crypto winter could spur Darwinian phase for digital asset treasury companies. Only the strong survive. Digital asset treasuries were flying high this year until Bitcoin's sudden October crash. Now, many of those companies are sitting on unrealized losses. With over 180 public companies currently hold crypto on their balance sheets, roughly 100 of that total having followed some version of the playbook Michael Saylor strategy pioneered in 2020 by issuing debt and equity to rapidly accumulate Bitcoin. The approach gained favor earlier this year when Bitcoin prices were on the rise, with investors betting on bullish trends for crypto under the Trump administration. Bitcoin's more recent volatility has prompted a sell-off across the digital asset treasury space. Strategy stock has fallen roughly 40% since Bitcoin's October 10th liquidation. Investors have pushed strategies into imitators even worse over the past month. Kindly MD has tumbled 39%. Eric Trump's American Bitcoin is down 60%. Anthony Pompliano's ProCap Financial has fallen 65%. Meanwhile, shares in treasury companies holding Ether, the second largest cryptocurrency, are down. BitMine Emergence Chairman Tom Lee is down more than 33% since October's crypto sell-off, as the token has fallen more than 25% in the same period. Other Ether holding treasury companies like sports betting group Sharplink Gaming and computing firm Bit Digital have seen their stocks tumble by more than 40% over the past 2 months. The key focus for these firms has been a ratio known as MNAV, which measures their market capitalization in relation to the value of crypto they hold on their balance sheet. An MNAV below 1 indicates that investors value a treasury company less than the crypto on its balance sheet. In Strategy's case, that metric inched towards 1x in late November, raising concerns that the company could eventually be forced to sell some of its Bitcoin to pay out dividends and debt payments. In response, earlier this month, the company announced a $1.44 billion cash reserve fund to sustain its hefty dividends payout and interest on debt for the next 21 months, should Bitcoin volatility persist. Strategy CEO Feng Li has pushed back on the notion that a compressed MNAV in a Bitcoin downturn poses a threat to the company's bullish business model. He argues that Strategy is an operating company, not a passive fund like ETF. Our products are Bitcoin-backed securities, he said. In that particular case, the valuation of these companies shouldn't be equal to their underlying assets. The valuation of the company should be equal to the ability to grow the underlying assets, grow income, and grow the business. We look much more like a Mag 7 tech stock than a closed-ended fund or an ETF. Strategy has made a similar argument to MSCI, challenging the index's provider's upcoming January decision on whether to exclude firms whose digital asset holdings represent 50% or more of total assets from global indexes. Bernstein analysts believe Strategy will make it through the crypto winter just fine. But many of the firms that copied Strategy's playbook during the boom, buoyed by soaring token prices and crypto-friendly regulatory wins, may not. Market concerns on the MSTR are overstated, and there is no realistic scenario which threatens the longevity of MSTR. Analyst Gautam Chujani wrote in a note on December 1st. However, several MSTR copycats may continue to trade at discount prices or discount to their NAVs without a clear path towards raising long-term capital. Out of the 100 Bitcoin treasury companies with a measurable cost basis, 65 bought Bitcoin above current market prices, according to a Thursday report from data aggregator Bitcoin Treasuries, leaving them with unrealized losses when the cryptocurrency plunged. Last month, while crypto's route kicked into high gear, 5 of those firms sold 1,833 Bitcoin. I think you'll see a lot of the DATs become irrelevant, HiveMind Capital founder Matt Zhang told Yahoo Finance. He said his investment firm evaluated more than 100 DATs this year and invested in over a dozen. Just like the 2000 internet bubble, where many people stuck the .com on their business cards and hoped they were going to make it, and they're not, because the fundamental business model was flawed. How much longer is this article? This article is still pretty long. Let's get to this part. In other words, treasury companies are about to enter a Darwinian phase. euro this month. The analyst said if and when Bitcoin prints new all-time highs, it could be the game on again for those who survive. So there you go. A soccer team does not want to be bought by a crypto giant. Does it ever say what the cryptocurrency fund is? Oh, Tether offered to buy Ubuntu Soccer, and they turned it down. They said no. So they rejected a lucrative takeover. Offered $1 billion, $1.2 billion for their shares, the family shares. All right, guys, that's all we have for today. Appreciate you guys watching. That's all we got. Be blessed. BitBoy out.